everything's going great guns. And I think it's interesting, after listening to Kerry, the farm consolidations are not nearly as great as the co-op consolidations. I did just a little bit of research. I'm not an expert in ag, and I'm not trying to sit up here and say I am. But in the 1980s, there were nearly 2.5 million farms. And in 2018, there's still 2 million farms. So that's only down about 25%. And that's one of the industries that has probably consolidated the least of the industries that are out there, because there is a tremendous amount of consolidation going on in every industry. It's a very competitive environment out there for M&A. It's definitely a seller's market, but buyers are doing more strenuous due diligence to make sure of what they're acquiring, because they're paying higher prices. And why are they paying higher prices? There's plenty of capital available, both debt and equity, but there are a limited number of quality companies on the market. Baby boomers are not putting their companies on the market nearly as quickly as a lot of people expected. Private equities and large corporations are also coming downstream and looking at smaller, what we'll call bolt-on acquisitions, to gain some R&D or some IP or some technology to make their existing companies a little bit stronger. Cross-border deals are down fairly significantly, about 50%. And part of the reason there is because of issues like Brexit and other trade policies that have made doing international transactions more complicated. And as Chris said, our economy has been incredibly resilient. 11 consecutive years of growth and expansion. That's the longest ever economic expansion we've had in the history of the United States. And one of the things that's interesting is U.S. merger metrics in the last 12 months indicate that there have been almost 14,000 deals that have been closed, which is up over 7% from the year before. And this is July 1 to June 30th, so this is very current information. Only 1,300 of those transactions were valued at greater than 100 million, which tells you that 12,000 were valued somewhere between undisclosed, which private companies typically do, up to 99 million. The vast majority of closed deals have been in what we defined earlier as the lower middle market. And if you were to ask me what stage of the strong and extended M&A market we're in, using a baseball analogy and hedging my bet just a little bit here with you today, I'd say we're in a later inning of a game, with the real question being when we go into extra innings. The point being there isn't anything out there on the horizon that seems to be slowing down corporate profits. There is going to continue to be plenty of money available to make acquisitions. And with the baby boomers not putting their companies on the market as early as many folks had expected, there is going to be a lot of companies that should be coming on the market over the next decade.